in the markets as of last time we chatted, which was Thursday. So I kind of skipped Friday, Saturday, and Sunday. My apologies for that again. But yet again, you have an option, an opportunity to watch the videos that I have actually specifically created for you, which is really the education of how to get into real estate and what makes sense to get into real estate right now, and then how to actually play the markets to benefit. Look, there are people that are making mad money, and I'm going to show you the proof of what's going on. But let's really quickly cover what's been going on in the world of financial markets. So, as you can see, Friday was a good day, more or less, for Dow Jones. Of course, it was down slightly, but let's take a look at the 3 month, kind of see what's going on. And again, we're sort of seeing this kind of capping going on. Is it going to continue? Is it going to break? Is it going to go down? Well, that just depends on who you ask and what your beliefs are. In this episode, we're going to talk about specifically how the market and the money, the financial game is all confidence game, also known as the con game. So, whether you believe something is going to go up or don't believe it, whether you believe that something is a good thing to hold or don't believe it, all of those things, when you combine it with a huge amount of people, is what actually drives what does well, what doesn't do well, right? So, people talk about, gold is good, gold is bad, Bitcoin's good, Bitcoin's bad, dollar is good, dollar is bad. Everything is good and everything is bad. It just depends on what the financial markets are doing and what's going on, right? And so if you really think about it, all of it is confidence game. Everything is a con game. So if people believe that the gold is going to, preserve their purchasing power and their wealth, they're going to jump in it. As more people jump in it, the price is going to go up. It's kind of like a self-fulfilling prophecy. Same happens with Bitcoin. If people believe that Bitcoin is really, really good and is going to be able to preserve and potentially grow their wealth, well, of course, they're going to jump in it. As more people jump in it, of course, the prices go up. Same happens with the dollar, the euro, the yen, and any other currency or any other commodity, if you really think about it. So it really is about the marketplace deciding what they believe is going to be a good thing versus a bad thing. And so, when people talk about, this is not good. That's not good. You don't want to invest in this. You don't want to invest in that. It's not necessarily just their opinion. It's also what is everybody else doing and how are things performing. That is what makes sense in my humble opinion. But let's go back. So Dow, it's sort of down a little bit. Let's see, NASDAQ. NASDAQ actually has been doing much better. But one of the things to keep in mind with NASDAQ is you can see NASDAQ is you can see actually the trend line going up as opposed to staying flat. But NASDAQ has been mostly driven by about 5 different companies. I want to say those are the FANGs. And if you don't know what FANGs are, make sure you Google that, okay? You want to definitely continue learning. So let's see, what are we going on with S&P 500? S&P 500, of course, as you know, is the largest 500 companies. This changes all the time depending on the size. And you will see that S&P 500 is very similar to the blue chip stocks of the Dow. It's sort of like kind of flattening out. Dow is much clearer to see. This one is kind of catching up, and NASDAQ seems to be doing just fine. Now, let's take a quick look at the gold. And gold has been, this is a 5-day gold. Let's see if we can take, there's no 3 month. See, it's interesting, but there's a 2 month. Since we've been looking at everything in about 2-3 month period, let's take a look at this one as well. As you can see, gold went from, what is this, $1,500 over here, up to like 17. And, if we zoom in, it's like nothing, right? I mean, it's sitting over here and kind of dropped. So it's flirting between, 1700 and 1750. That's kind of what has been the trend for a little while. And I guess people are just sort of, still going on. It's still happening. This, can we zoom this out? Because it's it's running out of a screen. It's so big. All right, so this is Bitcoin. It's actually Bitstamp. No, I want Bitcoin. 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 Why do they have like 7 different Bitcoins? Okay, I'm just gonna click on one. Let's see. Let's see what's going on. I don't understand why this is no data. Lovely. Uh, what? Hold on, y'all. Hold on. You know what? We're just gonna do this. Bitcoin price. We just want to take a quick look at the Bitcoin price, and here we go. Okay, so Bitcoin price is at 8,700. One of the things that we've seen is Bitcoin has been trying to break over 10,000 level. It has kind of dropped, and now you can kind of see sort of sloping down. So we potentially could see even lower prices for Bitcoin, right? So if we take a look at it over a year period, you will see that earlier we had about well over $10,000. It was flirting with like 13,000 and so on. It kind of has come down. It went up to 10,000, then we dropped in March, and we are actually trading in the up channel. However, you will notice that there's something funky happening right over here, and this was the halving right over here. So we're actually seeing, if you zoom in, you can see how it's sort of slowing down, and on a week basis, you clearly see a down price. So there is a potential that the Bitcoin is going to go even lower in price. It's sort of stabilized between 86 and 8,900, as you can see here. So roughly around 87. Excuse me, I had to mute you so that I don't blow your speakers away. So my apologies for that. The allergy season is definitely upon us. Okay, so now let's talk about what's going on in Europe, y'all. We've covered this almost 2 months ago now. My gosh, time flies. Almost 2 months ago, we talked about the whole challenge between the North and the South in Europe, and they're haggling over budgets. And the problem with EU and with Europe is that this crisis has been very, very interesting as to what's going on. And what's going on is that, in Europe, they started this EU project started, right after World War II. And it took a very long time, back in the 90s and the early 2000s for the EU to kind of develop into the one currency and all of that stuff. And, up until then, when things were good, they all kind of functioned as one, sort of, kind of. But the slower economies or the lower economy countries were suffering a great deal because, you're borrowing money from one entity, but you don't necessarily have a control. United States is in a little bit better shape, like Japan is as well, and I would even say China, because they are creating and spending and borrowing their own currency. So the manipulation, as wrong as it is much easier to actually do when you do that stuff. The challenge comes in when you borrow from a country, from a currency that is different than your own. Then you got to negotiate with them. And if there's fluctuation in price, and of course, that's not necessarily a story with euro per se, but it is an interesting sort of concept to learn about, that it's much easier, much better, much safer to borrow in your own currency from your own government, from yourself, technically speaking, than trying to go and borrow from a third party, because you don't know the currency fluctuation. You don't know if your currency is going to drop, their currency is going to go down, or what's going to happen to make your loan much more expensive. So an interesting piece that is going on with Europe is that the North countries have been performing much better economically. The southern countries have been struggling for a little while. I mean, if you take a look at the Greece, they have struggled quite a few years back. They still haven't recovered. EU kind of stepped in, IMF stepped in, and they were going through some severe austerity measures, and it's still not going all that great. The coronavirus has created yet another problem that has highlighted, specifically in Italy, Spain as well. And so these countries have been struggling for a while, and they're trying to actually get money from EU. However, the problem is that, they are they're having really arguments of how to help. And so some countries are saying no, it needs to be a loan and needs to be fluctuating rate. Some are saying no, 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 it needs to be fixed. Some are saying it needs to be a grant. And the problem is that vast majority of them are behaving very independently. They're not behaving as one unified front, which is the reason why I think many people are talking about potentially the EU breaking out, y'all, and not necessarily working. I don't know that it's going to break out per se, like to stop existing the Eurozone. I think that that still might exist when it comes to the trading and that kind of stuff. But we've seen it right now where the virus kind of started and spread out. They literally closed the borders to everybody else. So whereas it was like, oh, we are one and you can travel, all of a sudden France is like, nope. Germany is like, nope. Any country you can think of, they're all closing their borders and they're open to their citizens only. So that leads me to believe that, this whole like we're united is not so united anymore, but it will definitely be C. And they're going back and forth for forever now, trying to figure out of like, what do we do with the money? How do we create stuff? And it's a really interesting piece. It's been happening for quite some time. But again, we'll be able to learn what's going on with that. So now I want to switch over to a different sort of topic and story, and that is the story of anger. Mm, you gotta hydrate. So, for a while now, I have been talking about when this whole virus thing happened. I said, people are angry or people are scared. But that fear is going to quickly turn into anger when people are not able to go to work, not able to make money, not able to make living. And we've seen protests, all over the globe about what's been going on in the economy, from yellow vests in France to trouble in Hong Kong to protests all over the world, literally. And now we're actually seeing that has all died. People have gone away, but we're seeing this fear start turning into anger. And that's something that I have called about a month ago or so. And we're seeing that everywhere. So you can see that, California, they're basically saying, nope, we want to open. This is ridiculous. We want to be able to go and do things. We want to be able to make money. We want to go to work. And you've seen this happening. So this is just one of the latest ones happening. And I've actually seen the news, and I forgot to pull it up. My apologies for that. Of this actually happening in Hong Kong. Hong Kong has the protests are back, and they're back with vengeance. Right? It's sort of like when you trap something, right, and you mull it over, mull it over, mull it over, mull it over, and then bam, it sort of explodes. And that's kind of what's going on, what's been happening in Hong Kong and with the other places. And we'll see that happening from European countries all the way to United States. Latin America has been struggling with it for quite some time. I think that this is going to. It started happening somewhat in China, but in China is a little bit different because they have the social score and stuff. So if you misbehave too badly, you're banned from internet and banking and food and everything else. So China doesn't play. But when we talk about China doesn't play, let's talk about what's going on with the U.S. and China. And the Florida senator is basically saying there's no question that the U.S. is in a Cold War 2.0, as I like to call it, with China. So he's basically saying that no, 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 no. We are, they're basically accusing them of world domination, and they're saying, you know what, we're not gonna play this game. So U.S. has started to, as you know, a little while ago, started to ban some of the Chinese products, backlisted them. And Nasdaq is talking about not listing some of the Chinese companies on their index, right? So you can't even buy it in US. They're banning it. They're pulling away from manufacturing and really basically saying, I don't know that we want to play along with China. Oh my gosh, a sneeze might be coming on. My apologies. Let me have some water. Allergies, man, allergies. Everything is covered. Like my car is typically black. It's sort of yellowish greenish these days, and it just accumulates, so it gets everywhere. So there you go. Pollen is a real thing. Uh, so the Florida Republican slammed Beijing handling the coronavirus pandemic and its economic policies. And when he was asked whether relation between the two superpowers had entered a Cold War II phase, Scott replied, "Absolutely. There's no question about it. They are in for world domination. They take our jobs. They take technology. They put people in prison for their religion." So there is a very strong narrative happening right now within U.S. of not wanting, much to do with China, and so people are, there's the definite piece kind of happening that we should be watching out for when it comes to U.S.-China relations. And another piece to also watch, that makes me definitely worry about is the U.S.-Iran. Iran actually had gone to deliver that first oil delivery over to Venezuela. So if you haven't seen that, you can definitely look that news up online. And the U.S. is not happy about that, but they haven't engaged necessarily. So there's all these different news kind of happening that really makes me sort of wonder and question and worry about, like, what does the future really look like? But as China is starting to lose on US, India is hoping to basically get the companies to come in, and not just from the United States, but from all over the world. When the virus broke out, China was basically going out from country to country trying to help and donate and all of that stuff. And we've seen something very interesting. At first, the countries were sort of taking it, and then we've seen a bunch of countries basically saying, no, thank you. Not interested. They're returning the tests. They don't want anything to do with it because they didn't want to be indebted to China. So that was a very interesting sort of a geopolitical move that's going on and that's happening. And it's definitely going to be an interesting place, an interesting thing to look. But India is now basically saying, like, hey, you want cheap manufacturing? We're here. We want to play. So they are starting to have discussion on a framework that will attract global investors looking to shift manufacturing to the South Asian country. So this is indeed this is needed as multinational companies looking at relocating from China to India would prefer flexible central laws over state laws for uniformity of operation across different locations. So this is one of those things that I think is going to be interesting. As you can see, that it's been happening over here. So we can potentially see that quite a bit of manufacturing, quite a bit of work related stuff and importing and stuff is going to go to China. But I think that this particular point of failing to structure and failing to manufacture some basic things like face masks and medicine and that kind of stuff, and depending on the importing, we can see very likely that some of the stuff is going to potentially come back to local countries, and we can see that all the way from Europe to United States to everywhere. So where I do see things happening is that some of those jobs are going to come locally, so they're going to become nationalized, so to speak. Not nationalized like government owns it, although potentially, they could say, we will give you more money if you open factories, if you open manufacturing locally, right? Like, so U.S. might say, hey, if company XYZ decides to open a manufacturing company here in Texas, for example, we will subsidize it. We will give you all of these different breaks. So we could potentially see that, which could potentially technically be called sort of a nationalization. But if you go that route, then all of farming is basically nationalized. Not that the farmers will agree, but if you follow the same methodology, because some of the crops have definitely been subsidized by United States. So an interesting piece to kind of talk about is that they are really looking to open the world or open India to the world to get people in. Earlier this month, media reported that India's government had reached out to more than 1,000 U.S. businesses with an offer to relocate from China. Among those companies were medical equipment producers, food processing units, textiles, leather, and makers of auto parts. New Delhi had reportedly offered to ease tax and labor laws and to allow easier access to land. Officials told the companies that India was more economical in terms of securing land and affordable skilled labor than if they moved back to US or to Japan, even if overall costs were still higher than in China. So what we might see is that partially they might come back, partially they might do business somewhere in Latin America. All the corruption potentially could be an issue, so they might look for sort of a safer place to do that stuff. They might go and look at some of the Eastern European or Southern European countries where it's a bit cheaper to do stuff. And so what we might see is that if you have say the face mask, right? Because that's still a hot topic. Manufacturer, they might have a small portion manufacturing in India, small in United States, maybe small over in Europe or maybe even Africa somewhere. And then a very small portion somewhere in Asia. So we could definitely see that piece of sort of fractioning of who's doing what and how much we're producing where, so that if this ever kind of happens again, that you are able to sort of be much more nimble. We forgot how to be nimble in this world and in the economy, and I think that the virus is actually teaching us all to be much more responsible, to be much more sovereign, not just as a country, but also as a business, as an individuals. And so, from the business perspective, you gotta always look for competition and stuff, but you gotta think through, if this happens, then what do I do? If that happens, then what do I do? And how do I get myself in a position that I'm doing quite well and quite fine? And so, that's one of the reasons that, I am also doing the whole broadcasting live on my own platform because it's about risk. It's a third party risk. And if you don't know what third party risk is, it's basically if you buy a stock, for example, stocks are a perfect example of a third party risk. If you buy a stock, not only are you hoping, praying that the market is going to follow in the same footsteps and see the same thing that you are seeing, right? Because again, it's the confidence game, as we talked about it. So the con game is that you're going to bet on what everybody else is betting in the hope that price is going to go up. But the risk with the third party is that that company from whom you actually purchased those shares is going to do well, that they're going to intelligently reinvest their money into the research and development, into production, into improving other products, that they're going to do much better than they otherwise would have. And if that's not necessarily the case, now if they don't do what they're supposed to do, if a CEO misbehaves or they misspend money or they end up going to debt to buy their own stock shares, because nobody's doing that these days, right? Of course, everybody's doing that, and they're still doing it. And even though the money from PPP and all of this stimulus, which is not even stimulus, it's just really meant to sort of blanket over the giant hole that we're all faced with, they are, you know, all starting to go back and buy their stocks. So it's going to be interesting, and they're not all doing that, but a lot of people are. But let's go back to the world of business and talk about sort of what's going on with the oil. So oil actually, since the lowest of the low, when it was trading at like negative, I want to say $40, or it was negative 37 something, but let's call it 40 because it's easier math to remember. Interesting piece is that our brains remember round numbers much better. So, which is also the reason why you see when you talk about the floors and ceilings when it comes to trading on anything whatsoever, that it's always round numbers, right? It's $10,000 for Bitcoin as a ceiling right now, and it's 8,800 as the bottom. And so it's always interesting because the round numbers, it's much easier for us to deal with and remember the round numbers. So but since then, Oil actually has been going up. The production has slowed down. So if you had bought potentially oil when the things were going down, you might be sitting on some pretty nice returns, anywhere from, 15, 20%, which is huge if you think about it. That's like 2 months. It's less than 2 months. 20% in 2 months. Holy mackerel. That's like 120% on annual basis, y'all. And what you do is you take 20% for 2 months, divided by two, that's 10% per month, then times 12 to give you the annual yield return, right? So that's an interesting piece to kind of watch for. But uh, there's conversations happening that there are mergers and acquisitions deals that are happening within the companies. So let's take a look at it. Giant M&A deals are in the making following the oil price crisis, but the market may not see typical kind of merger. Sir Winston Churchill. See, I knew somebody said it, I couldn't remember, but he's the one. So Churchill once admonished leaders to never let a good crisis go to waste. Now, my question to you is, have you let this crisis go to waste? If you have, what the heck are you doing? And if you haven't, what have you been doing to benefit from it? Look, y'all, there's ways to make money. There's ways to lose money. It's much easier to lose money than to make it in the good and in the bad markets. The cool part about the bad market, so to speak, the downward market, it happens super fast and it's much faster to make money. So people that know what they're doing, people that know how to trade, people that know how to invest, they're making hand over fist. My question is, have you? And if you haven't, you got to study. You got to learn. You got to engage. You got to go out there and learn what is it that they know that you don't know, and how do they benefit, and how can you potentially benefit yourself. We are in some amazing times right now. And on one hand, I'm showing you all of the things that are potentially like, I don't know how I feel about this. But at the other side of this coin, is opportunity. Lots and lots and lots of opportunities. When the oil crashed, that was an opportunity. When the real estate goes down, that's an opportunity. When the interest rates get lower and you can borrow much cheaper, that's opportunity. So you can argue and fight and spend your energy talking whether it's a right or wrong, or you can understand the economic forces that are happening and allow them to help you benefit. And so that's the reason why we do this stuff every morning at 7 a.m. Eastern Standard Time, onedeal.com, onedealaway.com. My gosh, slash live. I forgot my own website, y'all. This is horrible. And you want to watch before everybody else. Of course, you can watch this on YouTube or other channels, but you definitely want to watch it early on and study. And the reason that I do it on my own platform is partially because of that third party risk. So I'm trying to basically create an avenue where I can engage with the audience without a third party, without dependency on anybody else, which is why I host my stuff, develop my stuff, hold on to my things. I believe that you got to hold on to your own assets. If you believe somebody else or trust a third party, good luck. If everything goes well, it goes well. But when things don't go well, that's highly problematic. So you definitely want to learn how to actually do these things and what you can do to benefit. So Wall Street banks and other large banks have been paying attention. They were shrewd enough to seize the opportunity presented by the last financial crisis to get hard-nosed government agencies to approve giant M&A deals they would otherwise have frowned upon. If you think about it, back in 2008 and 9, you had these big banks that became giant banks. I mean, we went from, I don't know, 20 large banks to like what, like 4, 5, if that. So the oil sector is probably going to do something very, very similar. And there are some, potential connections between places like ExxonMobil, Chevron, and BP. And there's conversations potentially happening that they are basically using. How do we get together? How do we stop competing with one another? And how do we actually work together? That's mergers and acquisitions. And they are it helps a lot. But the problem is that when you put these big companies and create a giant company, it's really hard to compete with it, and then they can do whatever they want from the pricing and that kind of stuff structuring. So if you're an investor, you definitely want to be on the lookout for this stuff, because if this ends up happening and you understand what's going on with the natural resources market, and you are very comfortable with the natural resource market, it might be a good idea to jump on the bandwagon. The reason that the big tech companies are so big and they're performing so incredibly well is because they're so big and it's impossible to compete with them. And every time that there is a new development that kind of comes out, they just acquire it. They just buy it. I mean, we did a show where Facebook was buying and investing things left and right. Amazon is doing very same thing. I don't know if you know this, but Amazon bought Twitch, and now Amazon is starting to compete in the gaming industry and the esports industry, which is exploding, especially right now where everybody's stuck at home and everybody's playing video games. So those are the things that you need to pay attention to. And don't just go with what's going on right now. You got to look 2, 3, 5, 10, 15, 20 steps ahead of what is potential, and then you position yourself in that regard. And so that is the piece where I say you got to study, you got to learn, and you got to, sign up for some courses, watch the videos, read the books, and spend time learning and studying, because this is moving super fast and it's going to continue moving even faster as we engage more robots, more AI, more technology. Things are going to move even quicker and you're not going to be able to keep up. So you got to study, you got to study, you got to study, and then take analysis of what you have learned to actually benefit yourself. Giant energy companies could use the cost-cutting gambit to justify mammoth deals that would otherwise fail to pass muster. Under this backdrop, Exxon and Chevron might band together and even throw in BP, right? So uh, this is the combined market cap is 425 billion and a reserve pool of roughly 70 billion barrels of oil equivalent would still be pale to compare to Saudi Aramco of 1.6 trillion value and 270 billion BOE, which is billion barrels. So barrels of oil, sorry. So this is one of those things that, if you think about it, it sounds unreasonable right this second. However, when the United States, when the Western Europe kind of look at it and say, well, wait a minute, we got to band together against all of these different forces. Remember, there's the geopolitical hot mess happening right now. Nobody trusting nobody, everybody fighting against everybody, east versus west versus south versus north. It's all happening right now. And it won't surprise me that in every war, whether it's a hot war or just a trade war, which trade wars can sometimes turn into hot wars, so that's a scary proposition right there. You need allies. So people will align with people that they can somewhat trust, or potentially align with people that they don't trust at all, so that they can watch them even closer. But they're going to start approving some of these deals in order to compete much easier. That has impact on you and I. And so you definitely want to pay attention. And then, they talk about the financial crisis and kind of how, who has actually, purchased whom and what's going on. There's the other places that are happening with like electronic and electric companies and that kind of stuff. So, there are deals happening of Caterpillar and Deere to potentially connect. What? Right? So you got to pay attention to this stuff, and you got to definitely read it of what's going on with this stuff. It's definitely something that I think might be happening and might be going on, and you can see kind of M&A activity in the gas companies by segment. So if you want to read this, it's actually on rt.com. And so you definitely wanna learn from this component. Now, a little while ago, hold on, water. We talked about how Hertz, more likely than not, is going to be filing for bankruptcy, and here we go. It is official this weekend. they have actually filed for bankruptcy. They have all of these cars that they're leasing, so they're paying a lot of money. But now nobody is really renting cars because nobody's going anywhere, nobody's traveling, and even now with this reopening of the economy, people are still scared, and it depends of where you go. If you go, I've seen a chart. That kind of shows of like who's traveling how much, and in places like Texas, for example, the people are like, yeah, whatever, we're traveling. Florida beaches, I guess, are back to being full. But here in New England, I drive around and people are in their cars with windows up, still wearing the face mask on. And, when you drive by and if you don't have it, they're like all pointing at you. It's really interesting. So, it's definitely an interesting piece to watch. And I don't, even with the reopening, like I said, I'm not expecting miracles to happen because a lot of people don't feel comfortable getting on the planes, trains, cruise ships, sitting in a car that somebody else was sitting in. Did they clean it? Did they not clean it? Do I feel comfortable sleeping in a bed somebody else slept in? So all of those things are still going to be highly problematic even with the reopening. Of course, people will be using it. I just don't think it's going to be at high levels that we are used to seeing it. Uh, the car rental giant expresses hope the financial restructuring will allow it to better navigate the precarious future of international travel, which has all but vanished after the country sealed their borders. So they are in deep, deep trouble, and the company isn't alone in feeling the financial strain of the last 2 months. According to the American Bankruptcy Institute, there were 560 commercial Chapter 11 filings in April, a 26% increase from the previous year. This is the part that I was talking about that is coming. And this is just a beginning when it comes to this stuff. It's actually going to be growing from here on out. Big name corporations such as Neiman Marcus, J. Crew among the victims. Of course, we talked about J.C. Penney's as well. What is that jean company? It's not Levi. My gosh. Oh my gosh, if you remember, put it in the comments, y'all, because my brain has just stopped. But they are struggling as well. So, anyways, it's very interesting of what's been going on. And I've already mentioned to you, some people are making money, some people are losing money. This guy has definitely made money, a lot of money, a lot of money, a lot of money. And as you can see, the wealth skyrockets to over 3 trillion US dollars during the pandemic. I think I'd be laughing too, all the way to the bank. Uh, Actually, I probably wouldn't go to the bank. Maybe partially to the bank and partially to the Bitcoin market. I don't know. Call me crazy. Anyways, over the last 2 months, unemployment in the United States has risen to levels not seen since Great Depression. However, U.S. billionaires got even richer during the same period of coronavirus pandemic. Again, this is one of those things where I tell you, you can get angry or you can learn what it is that they're doing and then follow in their footsteps. Now, I understand you're like, Nev, I don't have a little company called Amazon. Of course you don't. There's only one, right? But can you create your own? Can you start your own business? Can you learn how to do that stuff? Can you build a platform? Can you figure out how to trade and invest better? Can you get into all of these different things that people are doing? Yes, you can. You can do all of those things, and it may not necessarily serve you right now today, but look at it 10 years, 20 years from now. It could be enormous and incredible. The top five U.S. billionaire, Jeff Bezos, Bill Gates, Mark Zuckerberg, Warren Buffett, and Larry Ellison, saw their wealth grow by a total of 75.5 billion US dollars or 19%. Now, I do have a question whether Warren Buffett really did grow. I mean, I don't know. I don't know the guy. I don't hang out with him because, he sold everything and lost like a lot of money. And so if he's making money, how? That's what my question is. So the fortunes of Amazon, Spaces, and Facebook Zuckerberg together grew by nearly 60 billion, 40% of the 434 billion total. In March, there were 614 billion in the Forbes list, and 632 months later, including newcomer Kanye West at $1.3 billion. There you go. I guess you can be a singer too, and that could help you. Tesla's Elon Musk had among the largest percentage gain of billionaires during the 2 months, seeing his net worth jump by 48% in the period to 36 billion. The report noted that during the same approximate period, more than 38 million working Americans lost their jobs, right? So 40 million lost their jobs, nearly 1.5 million Americans infected with the virus, and more than 90,000 died. So that's definitely an interesting thing that is going on. That it's one of those things that is always interesting to me, and this is the part where they say, the rich get richer. Well, of course they do, because once you make money, A, you know how to do it, and B, it's much easier to multiply. It's very different when you don't have any money and trying to live paycheck to paycheck. You got to get into the strategy of how do I save a little bit more? And then the money that I save, you don't want to be a lifetime saver because they're printing money, right? They're like, so you don't want to do that, but what you want to do is have a little bit of money saved up so that you can go in and invest and start businesses. All right, let's learn. Let's have fun with this. The Fed walking into the trap. Over the last decade, the Federal Reserve and central banks globally have engaged in never-ending emergency measures to support the asset markets with little evidence of success. So there's definitely some graphs that you can see of. I don't even know if you can see this. This is super, super tiny. All right, let's see if we can see this stuff. Yes. Okay. Nope. It's still small. All right. I'm going to lower it. If you want to check this out on your own, it is located on the Real Investment Advice. So realinvestmentadvice.com. So if you want to read it, you can. So you can take a look at the graphs. The only reason central bank liquidity seems to be a success is when viewed through the lens of the stock market. The stock market has returned almost 128% from 2007 peak. Such is more than 3x growth of GDP and 6.5 times the increase of corporate revenue. And you can actually see what's going on. So this is the cumulative S&P growth. And then this is the cumulative, the red one is the cumulative real GDP growth, and then S&P sales growth. So as you can see, there's a huge sort of disparity that has kind of transpired over here that is very interesting. Unfortunately, the wealth effect impact has only benefited a relatively small percentage of the overall economy. The rich that we just talked about and people that know what they're doing, right? So the liquidity trap. When injections of cash into the private banking system by a central bank fail to lower interest rates and fail to stimulate economic growth, a liquidity trap occurs when people hoard cash because they expect an adverse event such as deflation, insufficient aggregate demand, or war. Signature characteristic of liquidity trap are short-term interest rates remain near zero. Furthermore, fluctuation in monetary base fail to translate into fluctuation in general price levels. So this is kind of what we have been seeing, right? Fed balance sheet versus Fed fund rate. Take a look. So balance sheet goes up, effective rate goes down, and we've seen this before. And but it was different, right? Before the effective federal fund rate was up at 4.2, then we dropped. We kind of tried to come up, and then woo, and then you can see the balance sheet kind of stayed flat. We went up a little bit, sort of stayed flat, tried to go down, and now we're like to the moon, to the moon. So here is the Fed balance sheet versus inflation. So again, blue is the total assets. Total assets, right, is going up, and the inflation level is basically like, inflation average for the period is, sort of flattish. So that's kind of the average piece. But inflation CPI is the gray fluctuating line, and you can see that is complete inverse. Interest rates are not just a function of the investment markets, but rather a level of demand for capital in the economy. When the economy is expanding organically, the demand for capital rises as businesses increase production to meet rising demand. Increased production leads to higher wages, which in turn fosters more aggregate demand. As consumption increases, so does the ability for producers to charge higher prices, aka inflation, and for lenders to increase borrowing costs. However, that is not what we're seeing right now. The velocity of money is important for measuring the rate at which money in circulation is used for purchasing goods and services. We talked about this stuff. This is the part where I give you a dollar, you take that dollar, you buy some sort of grocery. The grocery person pays the taxes. The tax man actually gives it over to the local school. The local school educate, right? You get the point. Velocity is useful in gauging the health and vitality of the economy. High money velocity is usually associated with healthy, expanding economy. Low money velocity is usually associated with recession and contractions. And you will see that the monetary, so velocity of money is this red line, and it peaked in 98, and it's been steadily going down. I mean, this is super down market. And then effective federal funds rate is this black or blue line that is going down. So the savings rate versus GDP and deficit, you can see the budget surplus, aka deficit, is right here. The GDP is right over here. We can see it's slowing down, right? The personal savings rate, so it's actually starting to go on the upswing, which is actually quite lovely. So, creditors, debtors, investors, producers, and consumers all change their primary orientation from expansion to conservation. Creditors become more conservative and slow their lending. Potential debtors become more conservative and borrow less, if not at all. So, we are actually seeing that right now. Lenders are not as eager to lend, although they say they are. They're not really. They want only like the cream of the crop sort of people that don't need to borrow, but people don't really want to borrow, right? So we're seeing this sort of interesting game where everybody's hoarding as much as possible, and money velocity has already been slowing for years. Which is a warning sign of that deflation is impending. Now, thanks to the virus lockdown, money velocity has begun to collapse. As widespread pessimism takes hold, expected to fall even further. In addition to psychological drivers, there are structural underpinnings of deflation as well. Financial system's ability to sustain increasing levels of credit rests upon a vibrant economy, and high debt situation becomes unsustainable when rate of economic growth falls beneath the prevailing rate. So the problem is that, right, like when you owe a lot of money back, which money is debt, so that's kind of interesting piece. Uh, if the cost of servicing that debt goes up, you go bust. It's right. That's kind of what happens. So that's the reason why they have to print money in the hopes to keep the rates low, in the hopes to be able to not just for the government to pay off its own debt, but to avoid a complete collapse. So that's the reason why you see this money printing. And I know everybody's talking about hyperinflation, but again, right now we're fighting deflation, and could it potentially at some point turn into inflation or hyperinflation? Maybe, but confidence game, right, into the money and the economy and everything reopening up would actually have to shift, and people will have to believe that it makes sense to do that. Right now, we're not necessarily seeing that. When the burden becomes too great for the economy's to support, defaults rise, right? As defaults rise, people want to borrow less. So over the decade, it has taken an increasing amount of debt to generate $1 of economic growth. So what is the trap? So the markets have currently priced a perfection. V-shaped curve, recovery to pre-recession norms, no secondary outbreak, and vaccine. If such doesn't turn out to be the case, the Federal Reserve will potentially have a huge problem. But the Federal Reserve has been buying stuff, have promised to buy stuff, which is the reason why so many people are jumping in it. The unlimited QE is dependent on the Fed needing to monetize the deficit to support economic growth, and reopening risk compounds further with a massive surge in the money supply due to various programs which have sent money directly to business and household. Again, I don't know that it's going there, but CPI is down, money market stock is up. I mean, we already know that. So, over the last 40 years, the U.S. economy has engaged in increasing levels of deficit spending without the result promised by MMT. The value of the dollar, like any commodity, rises and falls as the supply of dollar changes. Well, sort of. This is the part, again, going back to the con game. Yes, if the supply goes up, the price could potentially go down. However, the demand for dollars is so high, ridiculously high, because all these countries have borrowed in US dollars, and there is no liquidity in US dollars. So the demand for the dollar is much higher than the current supply, if you can believe this. And so right now, I don't see it. The problem is that if we overshoot the demand, then there's a problem. For right now, the US dollar is still strong. It will remain strong for quite some time, pending that we could keep this fine balance. Once we see that the balance has sort of shifted to more supply, not enough demand. And once we see the money velocity starts picking up the steam, at that point, I think is time to start then having serious conversations about where we are in the market and whether inflation or hyperinflation makes sense. So there you go, y'all. This is it. This is what's been going on, what's been happening. I hope you have a fantastic week ahead of you. Hopefully, you're up early and studying. I do invite you to join me tomorrow at 7 a.m. onedealaway.com/live, where we go over what's going on in the markets, in the economy, in the money, in all these different spaces that are going to go boom or bust, but there is an opportunity for you and I to make money regardless of what's going on. So thanks for watching. Do make sure you subscribe. Do make sure you come over here live. Check out the channel. Let's go out. Let's chat. Let's hang out live. Thanks for watching. Make sure you share these videos. Until next time, stay forever money blessed. And do remember, you are only one deal away. Bye, y'all.